Nice to see you. Thank you for joining us, Greg. I mean, you've got, about 120 hotel properties in the middle of the country outside of the coasts. Give us a sense of what business is looking like right now.
Yeah, sure. So, thank you for having me this morning. And we do have 120 hotel assets. We've got about 50, equity positions on different hotel properties across the U.S. And we've got about 70 debt positions where we have a, first mortgage or a mezz position on different hotel assets. Business today is extremely challenging, as you can imagine, just given the government mandated shutdown on most travel, and so when you look across our portfolio today, on average, we're running probably somewhere between 15 to 20% occupancy levels. Most of our hotels are in the select service space, so they're typically select service, limited service type hotels, as you mentioned, on the Marriott, Hilton brands. So these hotels continue to have some occupancy levels. We do have a couple of full service hotels. Those are, trending closer to, 0% occupancy in most cases because there's very little, conference or group business out there at this point.
And what is the status of your request for loans, whether it's in the Paycheck Protection Program or the other federal economic injury disaster program? Have you applied, and where does it stand?
Yeah, sure. So we did apply for the Paycheck Protection Program. We did receive our approvals. We went through a regional bank here in Georgia called Renaissance Bank. And that process actually was a really smooth process. We had a lot of success there. So we did get approval for not only all our hotel properties that were invested on the equity side, but as well as our corporate entities. And, in regards to the economic, injury disaster loan through SBA, we did initially apply back in March, towards, the end of March. Unfortunately, we had to reapply last week because they did change the application. That process has been a little bit disappointing just because we haven't really gotten much feedback, from SBA in regards to that program. And it's, so it's been that's been a tougher program to deal with at this point.
The company was an aggressive acquirer of hotels during 2019, obviously without any idea what was coming. I would assume you took on some debt to actually acquire those hotels. Are you paying that back right now? Are you getting forbearance from any of your lenders or financing sources?
Sure. So most of our lenders, because we did take on debt, as you mentioned, so most of our assets, on our equity side, most of our assets, we do have leverage or debt through, different regional banks, community banks, some of the national banks, and we are getting forbearance agreements. In most cases, we've gotten deferment of payments, upwards of, 90 days. So in most cases, that's what most of the regulated banks are offering that. We do have some CMBS loans, and we're still working through that process, with special servicers.
So how do you see this all working out? Assuming we get some openings and some of your hotels can come back to a higher level of operation. But when you think about your debt load and think about those 90 days, how are you sort of figuring out your balance sheet and what your opportunities and or costs are going to be? Sure.
So we've shored up a lot of liquidity over the last 30 days. So it's, from our projection, we think this impact from COVID-19 is going to end up, unfortunately, business is going to be very soft here over the next, it's been soft over the last 30 days. It's going to continue to be soft over the next 60 and 90 days. And we expect, the effects of it's going to be felt for probably the next 12 months as it relates to our hotel properties. So we've been pretty aggressive from an asset management perspective of just shoring up as much liquidity as we can so we can make it to the other side of this, pandemic. So that's been a big focus is, finding ways to cut costs, both corporately as well as at our properties, so that we're in a good position from a defensive perspective. And, as a company, we're starting to, look at ways that we can play offense as well as we come to the other side of this, unfortunate event. With that said, going back to just the Paycheck, Protection Program, that's part of the issue there is there's just not, although we did get approval for it, and I'm very appreciative of, the bipartisan support of that program, unfortunately, that's not enough capital for a typical, hotel owner to get us to the other side of this, of this sort of, this basically government mandated lockdown on travel. So it's, unfortunately, it's one of these situations where we probably need 10 times what, the current program's providing capital wise. to get us to the other side, to be economically, neutral. And when I say economically neutral, meaning covering the economic losses. So it's not even us making profits that we projected to make, over the next 12 months, but it's actually just to break even. When you look at our expenses to operate the hotels from not only, also, you have a lot of other expenses, including debt service, franchise fees and so forth.
What does the other side of it look like, Greg? Have you given much thought to how travel and staying at hotels is going to look like in this country after we do finally reopen?
Yeah, so I think personally, I believe, as a country, we're very resilient. I think without question, the next 12 months is going to be, it's going to be challenging, and it's going to be, I think a lot of people are going to have concerns as it relates to, travel given COVID-19 and, barring us finding some type of therapeutic or some type of vaccine. So I think that could limit, especially group travel, conference business, meeting business. I think that business is going to be extremely soft over the next 12 months. But I do believe, I think when you look out, 24 to 36 months from now, I do think you'll end up getting back to 2019 levels, probably 24 to 36 months out.